Welcome back. Now, on a year-on-year basis, inflation came in unchanged at 2.8% in May, marking the eighth consecutive month that CPI has remained within the SARB's target band of 3 to 6%. And at 3%, core inflation also held steady. On a month-on-month basis, though, there was a slight uptick of 0.2%. Food inflation is a concern, having risen from 4% in April to 4.8% in May. And as risks mount to the upside, independent economist Elize Kruger joins us with her analysis of the print. Thank you so much for your time, Elize. Of course, always benchmark these numbers against the expectations. So talk to me about where the headline inflation print came in with reference with market expectations.
Yes, indeed, Sanati. Headline CPI in line with market expectations today at the 2.8% level. So from that point of view, I think it's been expected. And really, I think the mix was maybe between the food side, which in my forecast came out slightly higher than what we expected. Compared to the non-food side.
Well, let us actually zoom into food because, I mean, we did see that uptick month on month of 0.2% where food inflation was largely responsible. What is happening there with food prices?
Yes, actually, it's quite broad-based, Zanotti. We saw that 7 out of the 9 food categories showed increases on a monthly basis. But the heavy-weighted meat category was indeed, again, the most important driver of the higher food price outcome. And there, we've had lots of reports about foot and mouth disease breaking out in a couple of our provinces. And that has had a major impact on meat prices in the last month or two already. So actually the increase in meat prices came out at 1.2% compared to the previous month increase of 2.3%. So slightly less, but still a major factor. I mean, we still had deflation for meat, in the latter parts of last year, and now meat prices are up by like 4.8% year on year. So it's all about supply and demand, and we have seen that the feedlots are basically in quarantine, and therefore there is not enough supply getting to the abattoirs, and that is why we've seen this the uptick in retail prices of meat.
Well, I mean, just on that point, Elize, of course, you supply and demand, and because at this point supply has been narrowed, of course, the price is going to increase. But in terms of this foot and mouth disease, there's also been, predictions and reports that because of this foot and mouth disease, some international export markets might be temporarily closed. And therefore, at least even though there's less supply, then at least there could be demand coming into the domestic front that could actually soften prices. How are you looking at that, or are things just not clear at the moment?
I think it's not quite clear. So yes, indeed, we might have extra supply coming from the fact that we're not exporting. But that supply still at this point in time do not get to the abattoirs. So from that point of view, I think we might have a situation where there's now a shortage of supply of meat for abattoirs. But at some stage, once there's a lifting of the restrictions on feedlots, we could see an oversupply again. So it might be a temporary pressure that we are seeing now, and then perhaps, hopefully, we can see that reversed in the next while. But for now, at this point in time, we do see pressure on retail level in meat prices.
All right. Well, let's go into one of the important categories that people are always looking at, and that is fuel. Just drilling into those prices, they continue to edge lower. But could this be the end of the good times, considering what is happening in the Middle East and what we've seen in the oil price?
Yes, indeed. We've had another positive effect coming through in May from lower fuel prices. Both petrol and diesel prices declined still at the beginning of May and actually also in June. So we should have another month where fuel prices still remain, a positive factor for the inflation basket. However, as we speak now, and with the oil price spiking up, sitting at around $75 per barrel, and I also noted the rand exchange rate reached the 18 rand level earlier today. We are looking at the rand price of oil already about 20% higher compared to just a week ago. And that, will result in higher fuel prices in July and probably also later in August, and who knows when this conflict might be resolved. So if I look at the current levels from the Central Energy Fund in terms of the under recovery at our pumps at the moment, it is quite hectic. In terms of petrol, it's sitting around 82, 85 cents per litre. And in terms of diesel, actually more harsh at about R1.35. And that's actually been based on numbers of 2 days ago. So since then, the oil price ticked up another about $3. So I'm thinking we are in for definitely a reversal of fuel price declines in the next 2 months. So I think perhaps to a lesser extent in July. So currently the average under recoveries are still quite low, around say 10 or 12 cents per litre, but it's building towards the end of the month. So we should see, I think, about 50 cents in July and similar or maybe slightly higher in August.
All right. Well, let's talk about the impact of this inflation print on the SARB. Of course, you know that they don't just look at one print, but just looking at the fact that for a long time, inflation has remained pretty low. What could this do then to the path of the SARB going forward? Do you think that there could be more room to cut interest rates?
Well, I do believe there's still more room to cut interest rates, especially if you look at the current level of our real interest rates. Now, so even despite the 25 basis point cut, and even if you factor in these higher fuel prices, which I have incorporated in my model, I still get a real repo rate in the order of about 3.75%, comparing that to the neutral real of about 2.7, 2.8. So you're still talking about 100 basis points. I almost want to say additional fat built into the current level of interest rates.
Okay.
So I do think there's scope. The broader economy remains very weak and really muddling along if you look at our growth numbers. So I do think there's scope for a further cut. But knowing the Reserve Bank and their conservative nature, I think they will be nervous about the current conflict playing out between Israel and Iran, and the sort of extent of the spike up in oil prices, and especially the fact that we don't know how long this will last. If it's a spike quick up and an early or a quick resolution, and we see the prices coming down quickly, there might still be more scope. But I think if we stay at the current sort of higher oil price levels, there could be more of a negative impact, and then the SARB might, sit on their hands wanting to see what happens.
All right. Well, thank you so much for your time and drilling into that inflation print for us, Elize. That was independent economist Elize Kruger.